Palantir Technologies secured another massive government contract, and it could change everything. With growing demand for AI in defense and national security, this company might dominate the government AI sector. Is this just hype, or the real deal? Stay tuned, because by the end you will know where Palantir Technologies stands, and if it deserves a place in your portfolio. Hello everyone, my name is Robert, and welcome to The Alternative Investor, the channel where we explore disruptive technology, overlooked opportunities, and smart investment strategies that mainstream media misses. Today, we are breaking down Palantir Technologies, stock ticker symbol PLTR, the controversial data analytics powerhouse that keeps landing critical government contracts. Will this company lead the artificial intelligence revolution in the public sector? Let us find out. Palantir Technologies is a software company focused on big data analytics. Their core platforms, Gotham and Foundry, analyze enormous datasets for critical decisions. Gotham is used by the US military and intelligence agencies, while Foundry supports commercial operations across industries. Then there is Apollo, Palantir's continuous deployment system that enables secure real-time software updates across various decentralized environments. What sets Palantir Technologies apart is its ability to solve complex problems in high-stakes environments, where lives and national security depend on the data. This is not just another software platform. They build combat-ready AI systems and deploy them across military, law enforcement, and government agencies. Now let's talk about the government side of the business. In 2023 and early 2024, Palantir Technologies experienced a significant surge in contracts from the United States Department of Defense, the United States Army, and allied international governments. One of their most notable wins was a $250 million contract with the United States Army to support the Titan battlefield intelligence system. They were also finalists for a multi-billion-dollar Army artificial intelligence integration program. In today's world, where geopolitical tension is rising and artificial intelligence is becoming a critical strategic asset, Palantir Technologies is positioning itself as the go-to contractor for defense-grade artificial intelligence. Governments may move slowly, but once they commit, those relationships are often long-term and valuable. These contracts represent multi-year recurring revenue streams driving sustained growth for Palantir Technologies. Let us shift to the commercial side of the business. For years, Palantir Technologies was criticized for relying too heavily on government revenue, but that story is changing. In the most recent fiscal year, Palantir's commercial revenue grew faster than its government revenue, driven by increased demand for artificial intelligence solutions. Businesses in manufacturing, energy, and healthcare are adopting Palantir's Foundry platform to improve efficiency and make smarter, data-driven decisions. A major part of this growth comes from Palantir's new AI platform, which enables organizations to run large language models on sensitive internal data without sending that data to external cloud servers. This is crucial for companies with strict data privacy needs. Faster decisions, lower costs, and growing commercial demand. Palantir Technologies has finally achieved consistent profitability. After years of operating at a loss, the company has now posted multiple consecutive quarters of profitability under generally accepted accounting principles. In its latest earnings report, Palantir announced $106 million in net income and earnings per share of 5 cents, beating expectations. The company holds over $3 billion in cash and has no outstanding debt. This gives them flexibility to invest in research, pursue acquisitions, or weather economic slowdowns without risking the balance sheet. Some investors may view the company's valuation as high, but when you factor in the strength of its long-term contracts and its leadership in mission-critical artificial intelligence infrastructure, that valuation looks more reasonable. This is not just another speculative growth company. It is a serious, long-term play on public sector and enterprise AI. Optimistic investors believe Palantir Technologies could dominate the government artificial intelligence space. Its deep relationships with the United States government and allied defense agencies create a durable competitive advantage. Once Palantir's software embeds into operations, replacing it becomes difficult. Second, Palantir's artificial intelligence platform is gaining momentum in the private sector, especially among companies needing enterprise-grade security and not trusting their proprietary data to public cloud AI models. As artificial intelligence becomes essential to national defense and corporate strategy, Palantir Technologies is uniquely positioned to serve both sectors. Palantir Technologies has done the hard part. It has built the infrastructure, established relationships, and proven its capabilities in real-world deployments. Now it needs to execute its expansion strategy. Despite its strengths, Palantir Technologies faces risks. A major concern is its valuation. The company trades at a high multiple relative to earnings. If growth slows or government contracts face delays, the stock could face significant downward pressure, impacting investor confidence. Transparency is an issue. Palantir operates secretively due to defense and intelligence ties. For retail investors, assessing the long-term roadmap can be difficult, or understanding how contracts impact revenue. Competition in the artificial intelligence space is intensifying. While Palantir Technologies has a first-mover advantage, it must continue innovating to stay ahead of rapidly advancing private sector competitors. If you're bullish on Palantir Technologies but hesitant about buying at current prices, consider selling cash-secured put options. This strategy allows you to collect a premium while potentially purchasing shares at a lower price if the stock declines. If you already own shares, selling covered call options at a higher strike price can generate recurring income. This strategy can help you make the most out of a volatile stock like Palantir Technologies while reducing your exposure to downside risk. Trading options carries risks and requires a strong understanding of market dynamics. For experienced investors, option strategies can turn a long-term holding into a more flexible income-generating position. So, is Palantir Technologies about to dominate government artificial intelligence? The evidence strongly suggests it could. With a proven track record in mission-critical deployments, growing profitability, and momentum in both public and private sectors, this company is not just riding the artificial intelligence wave, it is building the infrastructure behind it. As with any investment, there are risks to consider. This is not a short-term trade. It is a high-risk, high-reward opportunity in a strategic sector of the global economy. Let me know in the comments, are you buying Palantir Technologies or waiting for a better price? If you found value, be sure to like, subscribe, and hit the notification bell so you do not miss future videos. Thanks for watching. See you in the next